Everyone's trading style is unique to themselves. However, there's a lot of stigma in the Forex industry about what style of trading you use or what strategies you use. Everyone is either ICT or SMC or any kind of variants of this. However, sadly, indicators are kind of frowned upon and not many people use indicators. However, they're like very powerful if you use them correctly and if they are taught to you correctly. And that's why I thought this week on GFT's YouTube page, I will make a video dedicated to my top 3 indicators to use. Do you think indicators are a waste of time, or they're all lagging, or you have a kind of idea or negative ideology about indicators and you never really use them, then just watch this video and I might be able to change your mind, and you can use it as an extra confluence, because I mean, who doesn't want more confluences? If it makes you profitable, then use it. Why, like, I don't know why there's such a bad stigma about certain styles of trading or indicators, or anyway, we won't get into that. I'm here to help you guys on indicators. So without further ado, let's get into the first indicator we're going to look at. The first indicator that we're going to be looking at is the exponential moving average. And for you guys that don't know what this is, it's a type of moving average that places a great weight and significance on the most recent data points by definition. But if you're going to ask me what I think an exponential moving average is, it's basically a moving average that will calculate prices average over a period of time depending on the time that you choose. So if we jump on the chart and have a look at an exponential moving average, what you want to do. So if we jump on a chart, I'm just on Euro USD here, and we go onto the top where it says indicators. I want you to type in EMA, and typically I use this for EMA from the treasury. Click this and it will be added to your chart, and you'll see like these unusual lines. These are your exponential moving averages that you want to be using. Typically, if we want to be looking at a short-term exponential moving average, so we're day traders or if we're scalpers, we want to be going for around 10 to 20 days. So I'm going to change this to 10. I'm going to change this to 20. And I'm going to get rid of the other ones, and I will get given 2 exponential moving averages. What the 10 and the 20 means is basically it's taking data from the last 10 days, and then it's also taking data from the last 20 days. That's where they're different. And it will give us the average over that course of a period. Once we have a look, the shorter zone one, the 10-day one is blue, and the 20-day one is purple. So as you can see, they're quite far away from each other. If we jump onto a 5-minute time frame, you can see that the market kind of keeps quite snug to them. If you want to go for a wider one, so you want to go for like a major one, I'd look to go for a 50, 100, or 200. So now we're just going to put on a 50 and 100 to show you guys the difference. And as you can see, for me personally in my trading, the 100 is working quite effectively. So when the market has huge dips down, we can see that it comes back into this yellow EMA. So I'm just going to get rid of the other EMAs for now, and I'm going to put this one to like black, just so I can see it clearer. And what we mainly want to be using the EMA for is to look for continuations from an EMA. So for example, if the market is just continuously running up, we want to make sure that it's staying above our EMA like so. And yes, we will have like these moves down, move back up, and kind of balancing on it. It won't be like a strong support level or a strong resistance level. It's just going to be kind of like that dynamic support resistance. And as you can see in this period of time, if we was in shorts, we're completely fine as long as it doesn't have a strong hold and break above the level. So that's kind of given us a nice dynamic resistance. And as you can see here, once we actually broke above that level, you can see the market had a huge move up where it had a retest back into the EMA, then a move up again, and then a retest into the EMA, and so on and so forth. So I want you guys to back test this. If you guys are familiar with MTJ, definitely use that software to use kind of to back test the exponential moving average. Find which one works for you, find which time frame it works best on, and have a look where you can use it to your advantage or disadvantage. I'll give you one more tip on the EMA. So, of course, we spoke about that it's a dynamic support and resistance. However, I like to trade crossovers. What do I mean by crossovers? It's basically where the market kind of, like we spoke about before, where the market breaks below the exponential moving averages, then it then uses it as our resistance. So if I just draw that on. So it's broke below around here, and it's used this as resistance here, here, and so on and so forth. But if we just look back, and if we have a 100 and a 50 EMA, I believe, let me just double check. Yeah, 50 and 100. So you can see here we got a cross, so that's a crossover on a moving average, and that basically is telling us that the 50-day moving average or exponential moving average is caught back up with a 100 exponential moving average. So it's basically the 50 days is more bearish than the overall 100, so it's telling us that short term we are looking to potentially have a sell-off, and it's a correction from the further days out continuation play. So that crossover there is a good indication that the market might have a retracement. As you can see, we had a huge sell-off from there, and it didn't cross back over until here. So then we had a crossover, and of course it moved up. It will do. And we had no crossovers here, no crossovers here. So even me backtesting this for you guys now is showing me that, you know, the 50 and the 100 EMA is really good on the 1 hour time frame. So if we're traders on the 1 hour time frame, then that is good for us. And as you can see, we have crossovers a lot here, but we are kind of like in this consolidation phase. So we wouldn't necessarily be trading our EMAs in that zone. However, if you was to look for, like, if we had a market break here, we got a retest into previous demand zones down here, and then the market was breaking towards the top side, and we got a cross over our EMAs there. Then you can use that as an extra confluence to potentially look for the trades that you were looking for anyway. So I would recommend adding this to your current trading strategy or style. The next indicator that we can go through is volume weighted average price. This is the VWAP, and it's very, very useful. You guys can see this on my screen currently. Again, you have to go to the top here and then just type in VWAP, and the top one that comes up will, you know, be the one that you want to use. Usually this one comes with all these upper bands and lower bands. Just select VWAP, get rid of the rest, and you're going to use this similarly to an EMA. This is more of a scalping strategy indicator. It's the volume weighted average price, so it's basically telling us what is the average price by volume. Okay, and as you can see, the market uses this as kind of a medium, I'd like to say. So a rule of thumb for trading with VWAP is if we are below VWAP, that is bearish. If we are above VWAP, that is bullish. So you could use that as a confluence in your trading style, and you can also use it as like an EMA that we've spoke about previously. And if the market's holding above VWAP like so here, so if we're holding above VWAP, if we have a nice push above VWAP, it usually comes back and tests it and then has a run. So if we can find that anywhere else, see, this is all consolidation, so we don't necessarily want to be trading this. To be fair, this indicator is very good at futures, not too good at Forex. You can see here we use this as a support level. The market then broke below, and then it couldn't break above VWAP. So that could be a good indication the market wants to push down. And like so here, we broke above it dramatically. That's likely from news. Yeah, well, that's 1:30 in my time. And we broke above it, and we kind of just consolidated at this zone. If we was just to put on like a breaker here with a bit of room, maybe we can use the VWAP at the breaker as well, and we could have caught that good pop. Or you can add this to your trading style however you like. There's no kind of rule of thumb with it. It's how you adapt it. And as you can see, the market is controlled by the VWAP here, which is very nice, and it's telling us that volume is allowing this move to happen as well. So if we are continuously growing, that's telling us volume is coming in with the move as well, which is really good to see. This is a really good example here. The market did have a mark down below VWAP, and as you can see, these highs were developed to cause a break or a previous resistance, and then we have VWAP here giving us that kind of dynamic support, and then we have the market coming back into this previous pivot high where it bounced from and then had a nice move. If we're just going to add on our EMA, I don't know for sure. So if we just added on our EMAs, you can see the market did hold our 150 EMA, market marked up, and then come back, tested that zone. And if we was to break below these levels, then we know that's selling off. And as you can see, the VWAP and EMA is like very nice to use. But again, our screens do get a little bit ugly. It's quite hard to see, but hopefully you'll get to the point where you'll be able to take all these off and kind of get an idea on where the indicators are, because, you know, we don't want these on our screens 24/7. But VWAP is going to be used closely like an EMA. However, it's going to be used on the smaller time frames, like so. As you can see on the 5-minute time frame, it works quite wonderfully. If we could have caught a trade today, maybe the market was in a bullish uptrend. So again, we're going to be trading on a bullish uptrend. Maybe we use these levels from back here and kind of give us a nice bit of support. The market marked back up and then actually broke above VWAP. And then if we had on EMAs as well, you can see it actually had a nice kind of impulse from our EMAs once we caught back up. But yeah, again, hindsight trading, it's a lot easier to see it and be like, oh yeah, guys, you could have took this. But I want you guys to backtest this and get a conclusion for yourselves. Last but not least, the most hated indicator in the entire industry. It's a momentum indicator that is based off two simple averages. Okay, it's a very simple indicator to use. It uses a histogram and two simple moving averages, and I think it's personally great. I love it. It gives us an idea of how momentum is shifting. Okay, So let's just take everything off our screen for now, and let's just have a look at the MACD if I was to like never know what a MACD was. So as you can see, the market is having this huge sell-off, and once we kind of get to this pivot point here where the market started bouncing a bit, we had the move up, the retest, and as you can see on our indicator at the bottom, we got a crossover on our EMA. And I want you guys to visualize this with me. This is the issue that I had when I was trading MACD back in the day, and I want you guys to understand it as well. So let's just take this for example. So the market's moving down, and these are our two simple moving averages. And as the market's moving up, it kind of looks to cross here, but what could happen is the market moves down and then the EMA continues on down. As you can see, it happened here. So I want you guys to be aware of fakes and use this as kind of like a confluence, but don't use it as like an entry because it's not going to be perfect. Maybe we could have played the break above that high or the retest into this high. And as you can see, the indicator is pushing the momentum towards the top side. The histogram is very good to use as well. As you can see, as we're coming down in the momentum, we do have this selling pressure coming into the market, and then we have a big drop here, which is huge selling pressure. And as the market's kind of giving us this small uptrend with higher lows, we get higher lows on our histogram, potentially telling us the momentum is going to shift. So that's kind of an easy indication the market could be looking to make a move again. It's not solid that it's going to make a move, but it could be an extra confluence in your trading. As you can see, I've just lined up the key moves in this market. So we have this huge pop here, and if you have a look at the indicator below, you can see we have a huge crossover. So if I just increase this a bit, you can see we do have a selling pressure and then a crossover, and that's what we want to see, a momentum move towards the upside, and that is what we got on EU here. And of course here we have this kind of consolidation. We do want to see the EMA or the MACD kind of giving us this kind of downtrend area, and then we do have this sell-off where we did have a sell-off just here. It's not an amazing sell-off, but it is a sell-off. And as you can see, we got crossovers here. So if we was to take a trade simply based off that, which we would never do, we'd use confluences. But as you can see, the market did shift from there. And then we did have this sell-off, and then we had another crossover here and a crossover here. And if you have a look, you can kind of just see that the market is moving with this. And yes, it is lagging. Yes, it is behind the market. However, it can be insanely useful as a confluence if you just want to use it on your trading view chart when you need it. So that's wonderful. We've gone through MACD, EMA, and VWAP. I think these are my favorite three trading indicators to use in the markets. I appreciate you hopping in for this video on GFT's page this week. Very controversial things about indicators, but hopefully I've been able to kind of change your minds and give you guys an extra confluence to add to your trading. We are still running that 50% discount that you're all using up, so make sure you take advantage while it still lasts. I genuinely don't know when it will be available to, so just use it whilst you can. And if it is in this video, which I hope it will be, then make sure you take advantage of it. And yeah, appreciate you all for hopping in. I'll see you in the next video.